Hi, I'm Urmi Desai, and this is the Moose Smartly Show. We are back with our regular, most popular feature, our monthly roundtable, where we look at real estate in Canada, well, at least from its two biggest markets. In Toronto, I'm with my co-host, John Pasalis. Hi, John.
Hello again.
And in Vancouver, we are talking to Steve Saretsky. Hi, Steve.
Looking forward to it as always.
Excellent. So it's a bit of a gray one here today. How was your Easter weekend? Hopefully good.
Dead slow.
Slow. We relate everything based on what's going on in the housing market. So
I
East
noticed
weekend was slow.
Mhm. Which is nice.
And the weather was like nicer, now it's turned into some kind of weird gray. I guess we're going to get a slush bomb soon, but we are eventually going to get into spring. So let's talk about what spring is starting to look like. Let's start in the Toronto area. John, what are the latest numbers showing us about where the market's at?
So the market is largely, I'd say, and I kind of touched on this last month, kind of plateauing. So it's not heating up, it's not cooling down, inventory is steady. So technically, I mean, if we look year over year, sales are down compared to last year. Inventory is up quite a bit over last year, but that's keeping the market a little bit more balanced. Last year, we had this, acceleration in prices as we moved to the spring. Inventory levels hit like 1 month of inventory for houses, whereas now houses are kind of plateauing at around 2 months of inventory. Condos are at around 3 months of inventory. So it's kind of like flatlining. And I'll say it's, there's still competition, but what we're seeing on the ground is that, so you see these odd prices where some people just, I don't know, they're going in aggressively, throwing in money like this is, 2022 peak COVID, and just paying like irrational prices. But the vast majority of people on offer nights have very conservative prices. Um, and I think part of this is just affordability at today's rate. So people aren't going overly aggressive. Even when there's like 5, 10 offers, a lot of times there's only like one or two or maybe three offers that are kind of close to value. Many of them are below. Some of them, in some cases, you're going to have all of them slightly below what in theory market value is. I mean, in particular with homes, I'm finding that need a little bit of work because you obviously don't just need the capital to buy the home, but you need the money to do the rentals, and that's a bit tougher. So I'm finding those are selling for a little bit less than what I would expect. Obviously the ones that are turnkey and you can post on Instagram the day you move in are kind of, still selling for good prices and in some cases above what they're worth, but most homes are not like that.
All right, so inventory is climbing, but are buyers still chasing relatively fewer listings than we've seen?
Yeah, that's what it feels like. I mean, even though inventory's up over last year, I mean, last year the market didn't have a lot of, we were at a 20-year low in new listings. We got to remember that, right? So it's kind of like I don't want to say a misleading statistic, but we're comparing this year against the year where new listings were at a 20-year low. And that's why prices accelerated, right? It wasn't that the demand was so strong, there's just nothing to buy. So even though new listings are up over last year, it still feels like there's just not a lot to choose from for a lot of buyers. So, and that's partly why, a lot of homes, especially decent ones, are still getting bidding wars.
Right. And last year, am I remembering right? There is that strange run up in demand due to a little bit of a blip.
Yeah, in the spring, I mean, if we look back, that was when, I mean, the Bank of Canada decided to signal in January of last year that maybe they were done raising rates. So every kind of buyer got excited and thought they should rush in the market before rates get cut. And on top of that, Silicon Valley Bank kind of collapsed and that kind of pushed interest rates or mortgage rates lower. So that created a bit of a rally and prices accelerated. So, and one thing to keep in mind is that even if prices stay flat in the GTA now over the next 3 months, we're going to hit a period where they're going to be down year over year in June because around between this time last year and June, prices went up like 100 grand, like from the mid 1.3s to the high 1.4s, right? Because we had that sort of run up. And then by the second half of the year, prices dipped a little bit again, right? So even if prices flatline in the GTA, by June, we're going to be talking about a year over year decline in prices. So it'll be interesting to see how that plays out. And, I think people are going to take that as a negative signal, but it's a bit of a misleading signal because that dip happened last year, basically.
Right. So it seems like we went from relatively exciting times last year, at least extreme times,
Mhm.
low levels of his listings, a crazy weird blip or bump up in demand. But now it seems like we're returning to, dare I say, boring times, Steve? What is what is Vancouver
Yeah.
looking like?
I've made the joke that, housing is trading like a shelter and not like a speculative asset. So it's pretty boring these days. And yeah, John, it's very, very similar. Like it's funny, like yeah, sales in Greater Vancouver are 28% below their 20-year average. So the overall level of sales volumes is really low. But that doesn't take into the whole picture, right? This is the funny thing is like, I love when you hear in the marketplace, like, and I'm all for it, like, obviously, we need more transparency, more data. Like, that's what this whole show is about. But, the market thinks that if home buyers just had more data, prices would be more in line and people would have more information. It's like, the reality is like you look at those numbers, and if you're just looking at the data, it really doesn't tell you the whole story. So sales are incredibly low, but so are new listings. Yeah, they're technically up year over year, but they're still well below 20-year averages. Inventory, again, up slightly year over year, but still way below long-term averages. There is like hardly any good product on the market. Like if you're looking for an entry-level single-family house today, chances are 7 out of 10 times you're competing. You're paying, in my opinion, you're not paying a cheap price. You're paying. Prices are barely off their peaks. So it's just a weird market, Then you go to the condo market, particularly downtown, which has struggled throughout the pandemic. That market's still struggling. That's definitely a buyer's market. So it's just weird. Like there's no rhyme or reason today. It's kind of ebbing and flowing with inventory and with mortgage rates, right? It seems like every time mortgage rates kind of come down into the low fives, high fours, it starts to pick up, and then bond yields push back up and it slows again. And so I would say that you can't paint this market with this broad stroke that we're used to, which is like either it's all going up or it's all going down. Today, it just feels like a very strange market.
And on that note, John mentioned last year that some indication that maybe interest rates would start to come down, put some, pep into the market last year around this time. But now I'm getting the sense, and I'm wondering what you two are thinking. Experts are saying that even the chances of rate cuts not coming as soon as we thought in June is something that might be possible as some of the economic indicators start flipping around. We see inflation in some areas, but not in others. So there is some talk now that maybe we won't see interest rates start to fall until July. So I'm wondering what you think about that, Steve, and what the impacts on sort of the housing market would be.
Well, I mean, if this helps anyone, I just locked in my own primary residence rate a couple weeks ago. So 3-year fixed, 4.89. That was I feel pretty good about that. I just think I do think rate cuts are coming. It's just how many are we going to get, right? So, if someone was on a variable, like I said, such as myself, it's like, okay, your variable, let's just pick the numbers today. Most variables today are, John, what, 6.5
Mhm.
prime minus some variation. So call it 6.5. So it's like, even if you get, let's just say you get 4 rate cuts from the Bank of Canada. So it takes your variable down to 5.5. Like, I don't think that's the relief that a lot of people are looking for and expecting and hoping. And I think the other thing is the bond market going to play ball? I think that we're seeing is the data in the US continues to be incredibly resilient, and that's influencing our own market. And I'm just looking at all these announcements coming out of the Liberal government here with an election, 18 months away, and there's a new spending bill being announced seemingly every week. And so I'm just not convinced that the bond market necessarily is going to play ball. And so we might be talking about fixed rate mortgages 12 months from now, still with a 5 in front of it.
Yeah, and I think this is, I mean, personally, I'm seeing this affect sentiment. I think I'm hearing and seeing from some sellers who are very bullish that the market's going to rally later this year because they're very confident rates will drop and that's going to stimulate demand. And we try to explain to them that it's not that obvious that even if they drop a little bit, it doesn't mean it's going to have the impact that they think. But I don't know. It's hard to, there's just like, I'm seeing like in particular with a lot of sellers, just like there's a lot of this bullish expectation that the market's going to be on fire in 3 months, the second that there's a quarter point rate cut. And I agree, I'm not as convinced that that's going to happen.
John, I hear that all the time. It's literally like, oh, we don't get our price, then, we heard rate cuts are coming. And, what I hear is they say, I heard interest rates are going to fall. So I should just kind of hang on and wait unless I get my price today. We'll kind of live to fight another day, or we'll go on the rental market, wait it out 12 months, things will be better. And I feel like this is kind of like this mentality of Canadian real estate, which is like, number always go up. Every correction is short-lived. And we're like, what are we now? We're like, we peaked over 2 years ago now, and it's kind of just muddled along. It's been a really kind of boring, dull, flattish market where it's really gone just chopping sideways. And so, when they say, oh, interest rates are like, the typical seller we talk to is like, oh, I heard interest rates are going down. It's like, okay, like I said, yes, okay, the Bank of Canada is expected to cut rates. So your variable rate mortgage will probably fall to some extent. Like I said, is the bond market going to play ball? Because they don't control that. And so, but like no seller ever says, oh, oh yeah, you're right, fixed rate mortgages might not go down. It's just, oh, I heard rates are going down. So, but let's be honest. I mean, how many people are taking variable mortgages today? Most people are still taking 3-year fixed.
Yeah. Yeah, it is the fixed rate that matters way more, 100%.
And is the piece that maybe average consumers that we're missing is, what Steve actually just alluded to, that this market's a shelter market. It's no longer a speculation or investment market. So these rates will not see investors come back in any big numbers. And the rates would have to come down quite a bit for us to return to some of those highs that we saw in terms of sales activity, right? In the recent past. Is that the picture we're missing? How low would rates need to be to see that kind of activity return? And is that realistic that we'll even see that in the next few years?
Hey, John, so I was kind of running some numbers for like, we have like an investor client that we're kind of working with today. And so I basically said, okay, let's just look at like your typical like condo investor, right? I was like, it almost doesn't really matter what market you're in Vancouver. It could be Vancouver, it could be like a suburb 20-25 minutes away. But I was like, you pretty much have to put down about 35% to break even to get the cash, to get the numbers right. I'm talking strata fee, maintenance, property taxes. And like, I think like during the pandemic and even probably pre-pandemic, you could have probably gone away with about 25% down. And today it's about 35. And so it's just like, it's just not a compelling investment today as an investor, and you're speculating, if 35% down to break even, like, so you're just hoping the market goes up. And I think the prospects for significantly higher prices over the next several years is pretty minimal.
But I'd say, one thing I'd add is that I think the biggest cohort of investors are ones that we don't really see. And that's the people who have owned their property for years, have lived in them, and have just moved out. And they've got tons of capital, right? And they don't really care because like they've got so much money. It's not like they're going and buying with 20% down. Like they got way more, capital down, and they can easily refinance and buy something else. So I think that's going to decline a little bit, but I think that's still going to be the biggest share when we look at the statistics. If you look at statistics from Bank of Canada, all these other institutions, investors are still active. And you wonder, well, how the heck is this possible? Who's buying an investment property today? Well, not a lot are going out and buying when rates are 5.5%, but many who have owned are refinancing, taking capital out and buying something else and making it work that way. So that's going to keep happening for sure.
Would you say that refinance is just like, Because I'm always wondering, like, I guess it's like, is it you bought a single family house so long ago that it's gone up so much, so your cost base is incredibly low. So you just say, well, I'll refinance that house, I'll keep it as a I'll convert it to a rental property,
Yeah.
and then I go out and buy like a newer, bigger, better single family house.
Yeah, exactly. And that's what a lot of people do, right? And they're
Yeah.
fine leveraging, the existing one, taking, a lot of capital up to buy the principal residence. They deduct obviously all the interest from their cash flow. They kind of, but they have enough capital to make it work, even in some cases, keeping tons in where they're cash flow neutral. So it's still happening.
That's an interesting point, John. So then do you think those type of buyers, as well as the first-time buyers, will be sensitive to a rate cut when it comes June, July, even if it's not great? Again, we notice that market sentiment tends to swing a lot more wildly than the numbers often, would predict, right? It's almost just, a mood changer.
Yeah.
Do you still think that we will see a bit of that unleashing of demand when
A
that happens?
rally if rates drop.
Yes, when rates drop.
I don't, I'm not as convinced. Again, even like I said, I mean, if even if rates hit the high fours, which would be pretty good, or mid fours, like it's still a relatively high rate. Like we were in the fours last year, right? And we saw okay demand, not a massive rally. It was a price rally because at least in Toronto, because listings were at a 20-year low, right? If listings were normal, we wouldn't have seen an acceleration in price in 2023.
Hey,
So
John. So I was chatting with Ben Rabideau, our mutual friend there, and we were kind of discussing the market, right? It's the same thing that you just talked about, which is like what's been supporting the price levels, right? 5% mortgages. And it seems to be, it's obviously been inventory, right? Like in Vancouver, for I think the first half of last year, we had 20-year lows in inventory. So it's just hard to get a price correction in that environment. I start to wonder, like, if when you actually start to get like a rate cut or two, if that actually finally starts to bring on like more inventory. And like,
no, you think so?
I don't know, like I would be rather ironic though, where everyone's like, oh, rate cuts are going to bring like a new bull market. And then
You
ironically,
mean
it finally
the
brings the inventory.
maybe because of the mood of the sellers, anticipating perhaps more of a demand bounce than there might be?
I don't.
Possibly. I think, well, like, I mean, John, like one of my thought processes too is like, how many people are in like housing today where it's like you want to list and you want to move,
Mhm.
but like the rates are so high that like you can't really pass a stress test, right? So you can't necessarily upsize
Mhm.
because you're not qualifying for more debt.
Mhm.
Or how many people have, mortgage renewals coming up in the next, 12 months, 18 months, 24 months, where like more difficult decisions are going to have to be made, right? Which is, hey, maybe I have to sell and downsize.
Mhm.
So I still kind of wonder, like, having, for example, 10, 15, 20-year lows and new listings, how sustainable is that?
I think it's sustainable. And I think I'll tell you why. I think what's happening, like I think largely what's happening is, I think people, I think like you see tons of housing analysts look at new listings data, okay, from the MLS, and they're low, and they've been low for years, and they've been trending down historically for about 20 years. And if you look at even the distinct listings, so obviously not counting relistings, and they've been trending down largely for one reason, I believe, and I'll probably pull up the data, but it's because people aren't selling their freaking homes. It's like what I said earlier. It's
Yeah.
not because like the people are misinterpreting the number of new listings as a supply problem, right? And yes, Canada has a structural supply issue, but the lack of listings on the MLS is driven by the fact that people are keeping them as investment properties. Every 10,000 homes that don't get listed for sale because someone wants to rent them out are 10,000 homes fewer that anyone can buy and move into. So this is actually shrinking the stock of homes that can be owner occupied, which is why Canada's home ownership rate is actually declining. right? So I don't think this is like a cyclical trend. This is like a structural shift in the market where people are holding on to homes as assets and investments, and they're no longer available to be owner occupied. And this is largely why new listings and inventory is declining.
You know what? That makes sense to me. And I know this is gonna sound like a bit like, "Bo, put your tinfoil hats on here," but like I think that there's a great book that I would highly encourage everyone to read it. And I'm not saying this is where we are today, but it's a book called When Money Dies, and it kind of outlines Weimar Germany after World War II. And it basically just kind of tells you everything like crazy that happens in financial markets, particularly in housing, right? It's like people just see this currency devaluation that is happening, and housing starts getting treated as a hedge against the inflation, as a store of value, and doesn't trade like shelter. And the same thing happened there in the stock market. Like we can see like stock market today, right? Ripping all-time highs, crypto's back, like and so I to me that makes sense. I just think like we have seen this very large currency debasement, particularly over the last couple of years. And I think people are looking at it and saying, like, look, owning a single family detached house seems like a pretty good store of value.
Mhm.
Particularly when all the governments are saying, listen, housing is so broken that we're now going to override municipal zoning and we're going to allow fourplexes on every property.
Mhm.
It's like, well, then you probably want to own some land. And so to me, that would make sense. And I posted it on Twitter the other day. But if you look at gold, Vancouver real estate, and you say, okay, well, let's denominate it in gold, and it actually peaked. It peaked in 2005. So the price of an average house in Vancouver, and when you measure it in ounces of gold, peaked at 840 ounces of gold in August of 2005, and today it sits around 450 ounces.
So, I mean, isn't that just comparing like one assets to another that is just outperformed?
I look at it and say, like, I don't know, like at the end of the day, it's like depends what you're measuring it at, right? It's like, yeah, housing is getting incredibly more expensive if you're holding Canadian dollars. It's getting
Yeah.
less, it's not as expensive if you're holding, if you're denominated in US dollars or if you're denominated in gold, which is real money at the end of the day. That's my view. I mean, it's kind of a weird way to look at it.
Mhm.
But I just think it's a way to sort of justify, like when you look at like sky high valuations, and like you said, people aren't selling because everybody wants to hold the asset
Yeah.
because it doesn't trade like shelter anymore.
Like an asset,
It trades like an asset. And it's like, think about this, right? Is when houses cost $2 million like they do here in Vancouver, unless you already have pre-existing assets, you're not
Mhm.
getting into the market. Your down payment is coming from pre-existing housing equity or financial gains through the stock market. It's not
100%.
coming from you earning a T4 income and saving for 15 years.
Yeah, it's the market's broken. It's completely detached. Like in the GTA, house prices are 10 times income. Vancouver is probably above that, right?
Right.
Well, how can you buy a home with 10 times your income, median income, when the most a household can borrow is 4 to 4.5 times their income? Like that's the
Well, that's what I'm saying.
constraint.
I don't think those houses are
Like,
getting better. I just think the purchasing power
yeah,
is
and it's fueled by capital. I think that's the key thing. It's like people are just coming in with tons of cash, right?
anyways, that's my frame and lens of looking through the world, which is a little bit dark and depressing, but
On that note, the dark, depressing note.
Well, you've led me nicely to my next topic, which involves my little bit of a dark rant. Let's talk about, I mean, you've led right to it. Bank of Canada announcing that Canada's falling productivity is a national emergency, low business investment is a national emergency. Now, we've had a lot of guests, and you two both have been talking a lot about how our changing immigration policy has been one factor in why some of our productivity, for example, our GDP per capita is falling. And I think there's obviously a lot of merit to that argument. But that change to immigration policy, I've been thinking about it, is relatively recent when you compare how long Canada's falling productivity has been a concern.
Mhm.
And I've I've long thought one of our biggest problems is that Canada is such a real estate dependent economy. We are dependent on a rent seeking industry that's not very generative. For years, and Steve, you're pointing this out, people's money has done way better if you own a home, especially a single family home, than any of your investments in any other markets. Companies are now using their land not to build more retail or factories, but like Leon's furniture chain, they're going to build housing in the GTA. And of new homes purchased, we just saw a TerraNet report show us that in 2018, multi-property owners accounted for 15.3% of home prices. But by 2022, sorry?
Home purchases.
Sorry, what did I say?
Prices. Yeah.
Prices, sorry. For 15.3% of home purchases. But by 2022, their share of the market reached 25.2% of all homes sold in Ontario. So those investors, multi-property owners, are climbing their share relative to first-time buyers, jumping higher and higher. So obviously, investing in real estate is the game in Canada. So how much is our falling productivity about recent immigration policy? And how much is this longer standing issue, which we are structurally, in so many ways, rewarding real estate ownership amongst a lot of other kinds of generative productivity?
I mean,
You start. I got tons of go.
Yeah, without getting overly political, I think that yeah, I definitely think clearly so much of the capital is just flooded into real estate. I mean, I think you look at it, I was reading a couple reports on this actually, like one was from BMO, one was from the Bank of Canada. And there's a lot of those two are kind of like arguing about, okay, what is the root cause of it? And my personal opinion is like there is just I mean, if you're an income earner here in Canada, you're taxed at 50, what is it in Ontario? 55% basically. Like, I mean, it's just really hard to get wealthy earning an income in Canada. And so it's like you look at it and say, well, you plow all that money into a single family house, all the gains are tax free. It's a great tax shelter, right? And so like naturally, I just think more and more capital is obviously flooding into housing. And when you're bringing in 1 million people a year, it's like the equation is pretty simple, right? Like you're basically betting on, I think, government or political incompetence to solve the problem. So that's how I kind of look at it. And there's so many layers of red tape that's impeding the ability to build new housing and yeah, I mean, I think government is ultimately part of the problem in terms of the productivity. It's just all the compliance and hoops you have to jump through. Just staying compliant, even trying to get like a renovation permit.
Yeah, I think it's like the big challenge is even if it's not your principal residence, you're right. When you look at the tax system, owning an investment property, I mean, you have to think about it. Like average return, like in the past since 2015-ish has been around 10%. It's been ridiculous, right? So if you're making 10% on a leveraged asset, okay, where you've got 20% down, I mean, your return is incredible, right? I can't do the mental math off the top of my head, but it's quite significant. So
I can tell you the casual math is if you're trying to catch up with your stock portfolio,
they're not. It's not going to happen, right? So, and on top of that, of course, you're paying capital gains tax. You're not paying income tax, right? So the tax on that is significantly lower, obviously, when you eventually sell it, which some people just are holding on to them. But again, I think, Urmi, to your point, I completely agree to you. I mean, I think this is, a shift in a country and an economy where capital is like you said, rent seeking, which is basically holding assets that do not produce anything, that do not contribute to the economy, that is in fact taking advantage of an asset that is a human necessity, because shelter is, and B is scarce because we have a country now that has a 3.6 million shortage of homes, right? So, and I think this is a challenge. I think like our government's effectively kind of making it a very lucrative investment. And a lot of people are not putting their money elsewhere. They're just plowing
Well,
it into housing.
I mean, basically, like on the productivity side, it's basically how do you basically the question is really like how do you get more businesses and entrepreneurs? How do you
Yeah,
get more people
exactly. And I
creating?
do,
Yeah.
yeah. And I do wonder, Steve, I've been looking into this. I'm going to read a little bit more about this, but there are some structural incentives between Canada and the US that are very different, and there's all kinds of different ways. I mean, just off the top of my head, we see in the US every time they have a massive housing bubble boom bust, there's a massive deleveraging cycle that happens in the United States, for two reasons. One, they tend to go really boom and bust, let's be honest. When they boom, they boom. But the second thing is there's some ways of treating US housing related bankruptcies that allows Americans to sort of walk away, a little bit easier than Canadians, for example. So Canadians really are incentivized to just hang on, to their properties at all costs. That means that we're always providing a very stable base for real estate investment, on top of which more investors can pile in, as scarcity grows. So, I don't know. I just find that we maybe aren't looking at the full suite of reasons why our productivity is lower. And I think over time, not looking at the ways in which the government structures, tax structures, other structures are quietly, maybe unintentionally incentivizing holding on to real estate as an investment is something that needs to be looked at more and more.
100%.
Yeah. So,
I
and
think
on that,
yeah, Americans get wealthy of buying the S&P, and Canadians get wealthy off of buying pre-sale condos. And it's like, no, like how many young Canadians, they get like super excited about buying like the TSX. Like nobody talks about that. Like we a couple banks, couple oil companies, like so everybody just plows their money into the flashiest new pre-sale condo. And they said, I don't know, it's so embedded obviously culturally now that I don't know if that's going to change anytime soon. But
yeah, I mean, I think that's a longer term play. I would just make a last observation that even small to medium businesses, which, are a powerhouse in Germany or other economies, they take their strengths in certain sectors like groceries, whatever, telecoms, whatever, banking. Canada was supposed to take that and take it internationally and provide, productifies services. That was one big play we were going to do and other things like that. I think we've been kind of relying on this promise of stale strategies. And what we actually just see is a bunch of rent seeking industries in the wake of that: telecoms, groceries, real estate at home in Canada, not generative industries. So I'm going to leave my rant there. But I do take your point that population demand is part of it. So I wanted to turn us to our next topic, which is the government of Canada, the Liberal government, Minister of Immigration, Mark Miller, announcing that temporary residents, the target will be reduced and then capped. Now, this will be for the first time to 5% over the next few years. So if part of the reason why real estate is so resilient here, you would think that getting a control of our what has been record-breaking population increases might be one thing that could help. However, I didn't really see a lot of news about this. And I'm thinking it's just to the average Canadian, 5% seems like nothing when we're in this historic population boom cycle. And I know, John, you wrote about the fact that maybe we're missing why this is more important. And Steve, I know you've noted that too. So wondering what you think about that announcement.
Yeah, I mean, I think, listen, on the surface, it doesn't seem like a huge deal. I mean, they're talking about cutting non-permanent residents by something like 500,000 people. But, and I think Ben was, I think, kind of one of the first people on Twitter that I saw that started kind of raising, the kind of the flags about this and saying this is actually a bigger deal than most people think, and he's 100% correct, that it's just going to reduce our population growth rate. This isn't going to solve everything. If anything, it's just going to take pressure off price growth potentially, in the short term over the next 2 or 3 years, assuming they actually do what they're saying they're going to do, obviously, because I mean, we've seen a lot of promises over the past 8 years. But yeah, it's going to take pressure, and arguably that's going to do more to kind of make rents affordable than some of their other ideas. But again, we'll see how all that plays out.
I actually, yeah, I met with him yesterday in Vancouver
Oh yeah.
here. Yeah, I mean, I think it's a big change. I mean, I said to him, I said, "Oh, have you seen Ben Rabideau's modeling?" I said population growth under that scenario should drop from 1.2 million to about 300,000 by, in the next 12 months. And he was a little bit surprised, a little bit,
Sorry, who is this?
Mark Miller.
You're
Oh,
bringing home gold here, Steve. I'm putting
yeah.
up that chart for all our viewers that our colleague, as Steve has mentioned, has modeled what the proposed changes would mean. I have been wondering if the government actually knows because
I
they
didn't
had
get the
to,
sense that the numbers seem to catch them off guard a bit.
So you met with Mark Miller yesterday?
Yeah, I don't know. I thought it was like a sting operation where it's like, hey, this guy's been chirping me on Twitter. We're gonna get him in a room and corner him. But yeah, no, we just had a conversation, just an hour-long conversation about, the market and immigration and basically they were saying like they're looking at all these different programs and they're basically looking at the best way to sort of get the NPRs, non-permanent residents, down to his new target that he's announced. So it sounds like they've got a multitude of ideas of how to do it and what is going to be the best, most efficient, and non-offensive way to do that in a way because you do have a lot of private sector interests, of course, that want this cheap labor.
Mhm.
Of course, you've got these public colleges or private colleges that are using them as cash cows kind of thing. So there's a lot of private sector interests, I suppose, that are trying to fight this. But like I said, I think just floating those numbers, though, they were kind of like it's going to come down, but they didn't seem to be thinking it was that much. But like I said, I mean, so much
How,
of this is going to be in the execution, right?
how can they not know that? That's
I
actually
was honestly, I've been so suspicious because of you don't see a lot of headlines around it. I wonder if even media journalists like didn't crunch all the numbers enough
Yeah.
to say
I don't
that
think
if
anybody has.
no,
Yeah.
except for Ben's chart and a couple others, John's written about it. And I was thinking, we're just hearing nothing about this. I wonder if people don't understand the math and maybe even the people who announced it.
Totally.
I mean, it's mind blowing because the math's not that complicated, but it's interesting.
Yeah. Yeah. Like I said, it's like, they're obviously like, we were chatting with like all these like programs that they have and, this, and it's like, I'm not the immigration expert. So some of this goes over my head. So I mean, I literally just said to them, I was like, well, you guys should talk to Ben because Ben would be right up all over this. And he's the one that's actually crunched the numbers. So I'm sure that will probably happen. But yeah, I mean, it could be a big change. I mean,
Wow, you are bringing the policy insider, you know, mic drop, not mic drop, just drop of the month here at Move Smartly.
yeah,
Insider
like I said, I
conversation
was a little bit surprised, but I thought it was going to be like, hey, stop talking shit about us. But
So,
No, he was interested in your views, understandably. I find that very interesting. That actually chimes with like a feeling I've had, which
mm,
is we're just not hearing enough about how much of an impact this would have. Because John, this would overall, we would see some pressure even on rental markets, over with this, right?
yeah, you'd see it ease. Listen, I mean, if you go from, like Steve said, if you're going from a country that's grown by 1.2 million people per year to 300,000, that's a massive change, right? It's taking, again, it doesn't make things more affordable because today's prices bake in sort of a housing shortage, right?
Mhm.
But it takes pressure off the growth. And B, at the end of the day, if you're growing by 300,000 people and you're building 200 to 250,000 homes, your completions are slightly outpacing population growth, right? Which is kind of eating into our housing shortage. So it's a good thing. Again, assuming they gets to that. I mean, maybe they didn't realize what a massive shift this would have on the
John,
economy.
it's crazy. I think you and I have talked about. I know you've been like a big proponent about it on like Twitter and stuff.
Yeah.
But it's like I was looking at it the other day, is the all-time record high for completions like in Canada was 1974. So like literally 50 years ago, it was like 260,000 units completed in 1974. It's like, man, like 50 years later, and
Yeah.
like we haven't, talking about productivity, we haven't found a way to build and complete more housing.
Listen, I don't,
It could
yes,
have been
no.
cold weather housing construction international expert.
Hey, listen, I think this whole comparison is a bit freaking misleading. And I see this on Twitter all the time. Like, why can't we build homes like we did 50 years ago? The difference is in the 70s, all of our suburbs were farmland, okay? And we sprawled our way out, okay? It's a lot easier and faster when you're doing that versus waiting for every single homeowner to Toronto to convert their home to a fourplex. Okay, you're not going to hit record completions if that's how you want to build homes, right? So it's completely
Yeah, okay. That's a fair point. I guess
like
that's
give me a
pretty
break. I
easy.
mean, that's the whole point. Everyone today doesn't want sprawl, which is fine. I mean, that sprawl's not great. We don't want to build that way. I mean, even though that's how Texas builds, and everyone's like, Texas is amazing. They solved their housing crisis because their supplies inelastic, or sorry, is elastic. We don't want to do that. That's fine. People want to build within existing neighborhoods, but you have the constraint that the existing neighborhoods are built up. So you're waiting for, seniors to basically want to eventually move out and build their home into a fourplex. Like you're not gonna, and it's not as a bad thing. It's just you're not gonna have this construction boom when you're dependent on each individual homeowner converting their home into a mini apartment building. I mean,
It's crazy too, just to go back like to me like the 1970s. Like in Vancouver, we have like the most common single family house in Vancouver is called the Vancouver Special.
I've already asked.
And this is
That's
like
actually
it's kind of an ugly house, but people buyers today love them because they're like the layouts, they're very
Can you
easy.
describe them again for everyone who doesn't
It's
know?
like literally like you walk into, so there's no basement. It's just a two-story house. You walk into your front door, and then like downstairs you kind of have like a living room, a bedroom, like, and then you go up the stairs to your second level, and it's like kitchen, living room, three bedrooms, two bathrooms. Yeah, like they're very generic, but like apparently the city of Vancouver had like a blueprint. Basically, it was like you could just copy this blueprint and you could just build it, and like so they just built like a ton of these in like record timing because there was like no like bureaucracy and red tape. It was just like, yeah, the plans are pre-approved, build them. I know we've had, Sean Fraser come out and talk about, oh, we're going to build like new wartime housing, like pre-approved blueprints. And it's like, buddy, that just is never going to happen,
No,
and
man.
not in today's
Not,
environment.
yeah, I agree. Like not when the city's built, like and everything. Like it's easier when you're building off of like, new developments and you know what I mean?
Totally.
Converted farmland. Anyhow, what a
but
mess.
But I mean,
John,
I gotta admit, that's
isn't
also kind of shows you too, like just like I just think there was a lot less like layers of like bureaucracy, red tape like 50 years ago, where like you could have one blueprint and just copy paste, copy paste, copy paste.
Yeah.
Whereas today, it's like, yeah, like there you submit a permit into the city and like, well, your roof is too steep. You gotta, rejig that, and your garage is, a couple inches too high, so you gotta bring that down. It's like the nuances that you have to go through today are just crazy.
I wonder, John, if just to follow up on something you were talking about, I take your point that land was way more available. You were able to build out. But when we look at markets like Texas and the United States, one thing I'm really curious about is why they are in the throes of a housing crisis themselves. There's a lot of anger around housing crisis, even though their prices to us in some cases seem totally fine. And one of the issues is that even though they're able to build all these satellite towns and cities around Texas and everywhere else, they're not always necessarily where people want to be. Toronto and Vancouver are such magnets in Canada.
Hmm.
This is where so many of the people are pouring into and want to stay.
Hmm.
You can sprawl out only so far because people don't want to go that much further out than that,
Hmm.
after a while.
Everyone feels like they have a housing crisis because they're comparing local prices to what they were last year and 2 years ago. So even if they're affordable to us, they're high for them. So the reality is most cities in Texas, their prices, yeah, they're a lot lower than Toronto, but they're growing even more rapidly than Toronto, right? So prices are on a tear, even though they're building. But they also have the same issue where if you look at institutional investors like big REITs, they're like the dominant buyers in those markets. I think they buy up like 20% or 25% of the homes in Texas. So when you have like one pool of buyers kind of buying up a significant portion of the homes for sale each year, I mean, what's that going to do to freaking prices? I mean, obviously, you're creating demand. It's going to drive up prices. It's taking stock out of what can be owner occupied, which is what I touched on earlier. So yeah, it's going to push prices up. So there's so many problems even with those markets.
You keep in mind, like a small town though in like the US, like a tiny town where like, oh, you live there? Like a small town in the US is like 100,000 people,
Yeah.
right? It's like I mean, that's like the size of Victoria here, right? Like the capital of BC.
Yeah, I'm digging into this. I'm always struck by how US media is talking about this crisis. Like it comes up a lot, prominent podcasters are taking years off to just write about the US housing crisis, and so I've been thinking about it and reading into it. And it seems like one dynamic there is that your cultural conditions can change a lot in the United States because they have a lot more decentralized ways of electing everything from their police to their school boards to everything else.
Mhm.
So the nature of those towns and like the character of them can be very different. So even if it's like a satellite burb to a city, I think the character can change a lot. So I think part of it is that what it seems like to us is, oh, you can live here or here, like in the GTA. You can live 2 hours out this way or that way. And life is relatively the same. We have a provincial curriculum. We have a lot of things that are similar.
Mhm.
Maybe there's way more difference in the United States. And so
Mhm.
people aren't able to be where they want to be.
Yeah.
And anytime you can't stay where you want to stay, I feel like that's the root of a real housing anger. But in Canada, I wonder if we have a different problem. You can stay here in Toronto, but you have to live in a shoebox. So it's like we have like a lifestyle thing that we don't like here,
But we're
right?
also way more expensive. So like in some cases you can't even stay here if you want to actually buy a home.
Right.
Like you can't. Like it's not an option unless you want to drive like 2 hours out of Toronto. So
Yeah.
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 So
So anyway, who knows? It's one of those things that because housing is not like a stock, it's so hard to model say each piece of housing is similar. It makes it a really tricky thing to solve. So let's turn to the next thing that supposedly is going to, try and solve this housing mess, which is the federal government's upcoming budget. Steve, you mentioned this, April 16th. It's supposed to be a super housing focused budget. We've already seen one preview, which is a renter bill of rights, which no lesser a figure than the Prime Minister of Canada spoke to. So maybe, this is an indication that they are trying to make housing their top announcement. The two proposals discuss for a database of rental listings. So I guess the idea is that if tenants know how much rent other tenants are paying, they have more power to negotiate. And rent payment, the record of your rent payment history being included in credit reports. So I wonder, John, what you think about those measures. What problems are they solving?
they're solutions for problems that don't really exist, quite frankly. I don't know how else to put it politely. I kind of chatted about it on this show, on a few other platforms. It's nonsense. It's all like it's complete nonsense. Like having a data, knowing what a unit rented for 5 years ago doesn't matter. Doesn't matter. Like
John, I had
doesn't
a
matter, Steve. Like it's
I
useless.
got in an argument on Twitter with Trudeau's former economic advisor. I'm not going to
Okay.
mention his name. And I said, how does knowing what the unit rented for 7 years ago going to give a prospective tenant more bargaining power when you have a vacancy rate sub 2% in pretty much every major metro in Canada?
Mhm.
And he's like, and then he sends me like this academic paper that suggests that, having more transparency on pricing would give them more leverage. And I
Oh
was like,
my
this is the
God.
problem, is like people submit these papers that are all like hypothetical, don't live in the real world. As you know, John, it's like the market is set by the rent. The rent is set by the market. And especially today, it's like, if you give one example, is like if a landlord rented out a unit for $2,000 7 years ago, and then 18 months ago did a full scale rent out and now is charging $3,000. Like, how does that help a tenant? Like, if you don't want to rent it for $3,000, no problem. Somebody else will. It's all it's going to do is remind the tenant how badly the rental market has inflated over the last number of years.
Completely, yeah. It's mind blowing. It's mind blowing that they actually think this will add value. Sales data for houses is public, right? Anyone who goes looks and buys a home, yeah, they'll look at what the home sold for 8 years ago. Like, does that give them negotiating power over
Yeah.
today's price? Think about it that way. You're gonna walk in with your lowball offer with the other 8 bidders and say, "Well, I know what you bought 8 years ago."
In
Poor
that price.
seller, here's my offer. Don't
Are
worry
they
about the other people bidding on it.
was
Like,
he
give me a
are they
break.
creating like an app or a new like MLS system that's
Yeah,
gonna be
maybe
like
it's mind blowing.
rentcan.ca past
As someone
rent?
who likes to bring up those kind of numbers in my negotiations, and as someone who's had to bid for rentals, it doesn't work.
They dropped another 6 billion today though. Did you see that?
What do you mean?
On
They dropped $6 billion announcement today on basically, if it's basically they're going to drop $6 billion, I think five of which goes to the provinces directly if they sign on. If they sign on and agree to make fourplexes or 4 units of a right of way. So saying, okay, if you sign on by this and you don't raise development charge fees for the next 3 years, then they're going to give them each province a whole bunch of money that can be used towards infrastructure upgrades, right? So obviously the big conversation today is saying, okay, fourplexes sound great, but like how we can upgrade the water lines, sewer lines, the sewage treatment plants. So all the infrastructure that costs a lot of money. And so the government is the federal government, I actually think, has come out with like, this is actually one of the better ideas, not this tenancy renters bill thing is ridiculous. But to me, this is actually a policy that makes sense.
Yeah.
Um,
Who announced this? See, like this is what I'm wondering about. What is going on in that comms department over there? This is something that Justin Trudeau should have announced. I agree with you.
I don't know. Yeah, I don't know who officially announced, but I read it this morning. It just dropped. So
Yeah, and this just drops somewhere in the weeds. And meanwhile, I agree with you, Steve. I mean, this gets at some of the problems of why the municipalities are screaming that we can't approve more than we can serve with infrastructure. I do like the idea that, zoning changes, we've talked about why we need them. But then I like this idea of development charges going after that gouging and that red tape. So, John, what do you think about something like that? We'd have to look into the details to see more
Yeah,
about
it
this.
sounds like they're targeting provinces rather than municipalities this time, right?
yeah,
Yeah,
they are. So I think it's a bit of a jab personally at like Doug Ford, who came out
yeah.
and says we're not going to allow 4 units on a lot, because he just, correct me if I'm wrong, he just turned that down.
Yeah,
So I think
yeah.
they're saying, okay, well, how
Province-wide,
about
yes.
this?
Yes.
You want $1 billion for infrastructure upgrades? Like you're gonna have to sign on to this.
I
I
mean,
like that they
people have
tackle
been
development charges though.
yes, and some people have been confused. So it's not that fourplexes aren't allowed because people ask me that. It's like, well, Toronto, does that mean they're not allowed anymore? No, I mean it just means that the province hasn't legalized them across the entire province, and that's what he basically kind of put the thumbs down on, largely because he was worried about pissing off suburban voters who
His
don't
own, no, but this is wrong. I
fourplex.
mean, Vancouver, the premier of BC,
Yeah.
did extend that to the province.
Mhm.
Um, I really think, John, there's so much cynicism in that play by Ford to
Mhm.
think that all the municipalities around Toronto aren't part of the greater Toronto area
Mhm.
and make up that that symbiotic package
Mhm.
that is the Toronto area
Mhm.
is pretty cynical, from the Ford government. So anyways, I take that, Steve, maybe it was a pointed remark towards the provinces, but I would also say that if you understand like the constitutional mechanism of how money flows, the feds usually do talk to the provinces when they may reach historic negotiations on health, social services. For the first time now, they're basically kind of introducing a new transfer, a new landmark type of infrastructure housing transfer.
Mhm.
So we'd have to see the details, but I would think this is a direction that's positive.
Yeah, I mean, these are positive policies, 100%.
Oh. But again, you just wonder about their communication department.
I think the idea is basically they're going to drop like a new policy. Like I think, we saw like the school food program yesterday. Today
Mhm.
it's this, tomorrow it's that. And I think it's just like blitz scale, dropping money from the sky every single day for the next 2 weeks. And an election's obviously coming up next year. I mean, like the amount of money that is clearly being spent. And this comes back to like, I mean, my view anyways, of like getting the bond market to play ball on interest rates. I mean, I don't know. There's a lot of spending going on, we'll see.
Yeah.
So you've answered partially, Steve, my final question for you. What would you like to see in that budget? More of, less of, and what do you think you'll see? I think you've already said what we're going to see.
I don't know. I think they've brought in some good changes. I just think like the unfortunate reality is like, listen, guys, you had 9 years to do it. It's like, and I know like everyone's kind of like pointing blame, like, oh, it's the provinces, it's the municipalities, it's the private colleges that are to blame for the immigration. It's like, yeah, but like it all stems from the top. Like at the end of the day, it's like, it's like when like when you're running a business, right? You're the CEO, like it's like, yeah, is it like, all the problems of the company aren't blamed to the CEO, but hey, you're running the company. And so it's like, I think it's the same thing with the feds. It's like, you're running the country. Like you had 9 years and, like John, like the removal of GST on rental buildings. I mean, they talk about that when they got elected in 2015 and like they
100, yeah.
finally brought it through. Good policy, but like, my God, it took eight and a half years to do it.
Yeah, 100%.
So I think they're actually making some good changes and they're moving in the right direction today. But I just think damage has been done. It's going to take years to fix it.
Hmm.
I think that's fair. It's not partisan to say they seem to miss the whole housing crisis until it just exploded on them. John, what would you like to see more of or less of in the budget, and what do you think you're going to see instead?
Yeah, I mean, I agree with Steve. I think they've been doing some good things. I mean, I think their policies kind of encouraging municipalities to upzone are good, especially if they're doing that now with the provinces. Investing money that way is certainly positive. I agree with Steve. I mean, I think it's going to be hard to spin this because obviously this is all coming very late. Renters obviously have seen rents surge. Home prices are just so unaffordable. So I think it's a very hard story to spin. I think. Listen, I think I'd love to see, say, for example, policies that make it harder for investors to be buying up houses, going back to kind of this sort of rentier kind of system that we're setting up in Canada. You can't ban investors, you know what I mean? And I'm not blaming investors for a housing crisis, but you can't have an affordable housing crisis when the fastest growing share of the home buying segment are investors. Okay, like it's just like not possible. It's not possible. You're shrinking the housing stock that can be bought by owner occupiers. So whether that's increasing capital requirements or changing underwriting for investors, effectively making it harder for investors kind of to buy homes so that there's some more inventory for first-time buyers is what I'd like to see. I think what we're probably more likely to see are loosening of mortgage criteria for first-time buyers. That's going to be spun into helping first-time buyers buy a home, which is just going to drive home prices higher in the short term. You know what I mean? So, because what else can they do
Yeah,
to?
that's fair. But I
I,
think you brought up is like, yeah, fair recommendations.
Mhm.
Yeah.
And
It
you're
feels like John, they've kind of just they're making the right decisions now, but like obviously, as you know, right, a lot of this is focused on like the supply side,
Mhm.
and which is great, but like for their sake politically, I mean, supply takes a while to come through and have a meaningful change. It isn't going to happen in the next 1, 2, 3 years.
No, exactly. And that's why I think, like, listen, I think demand, obviously they're targeting demand with their population growth now, which you have to do, which was smart. They, for some reason, did not capitalize on that story as like a housing story, which I think it is. And I think, targeting investors is something that they could do that would be politically popular, but also I think it's just like a positive policy. Like, again, like, let investors buy, just don't make it a lottery ticket, and they shouldn't be the fastest growing segment. Make the return lower somehow, make it harder to qualify, do whatever you want to do.
So great point, John. And again, we're talking about why is their communication around some of these things so strangely weak, where, but I wonder if it's because they don't want to make too much of it. I also wonder where Jagmeet Singh, coalition leader, is. He should be screaming at Trudeau, like, you better put this in, otherwise I'm not helping you at all, right? A move against investors from the NDP seems completely natural, but you don't see anything like that, right? Even from their housing platform. And I wonder, John, if and Steve, this is just part of the bigger problem of weaning Canada off real estate. Who's going to be the first to
They
do
don't
it?
want to. I think that's the point. I'd be surprised. I'd be shocked if they try to do anything like that.
You know,
Doesn't make
and yeah, and they don't want to, because do they feel like politically it's risky in some way?
No, I mean, I don't know. It's hard to say. Like, I used to be, I don't know. I think my opinions have changed. I used to be very cynical and think that they're just doing things, like when they launched that first time homebuyer incentive, this shared equity thing, like my mindset was they know it's not going to work. They're doing it to score political points. You know what I mean? Like, I kind of took this cynical approach to it. But maybe they just thought it was a great idea. Almost like when you have his former advisor kind of sharing you academic papers about why what a unit rented for 8 years ago is a good thing. Like, maybe they actually think these are good ideas, which like makes
Yeah.
which
Yeah.
you know what I mean? Like, I'm starting to shift that way. Like, but who's like advising them that it's a good idea? Like, anyone who's in this business knows this is like not a good idea. Like, it's a waste of money,
It's
right?
almost scarier
And like,
if they
honestly, it's
think
not
it's a
just like a waste of money. Like, honestly, ask the average renter. Like, you tell that story, and the thing about from a comms perspective, any renter you say that to, they're like, negotiate with my landlord. Like, what do you think
Yeah.
this is? Like,
when
the
I'm in a
market's
lineup
so
with
tight.
12 other renters. No,
Yeah, and fine,
Yeah.
it's
obviously
a
these
little
people have not
slow.
rented
Oh,
recently.
You
and
missed
yeah,
the
the rental market's a little slower now because we had a ton of completions in Toronto, but that's a short-term dynamic. Generally, you're not haggling with your landlord and getting a deal. But anyhow,
standardized nationwide lease agreement.
oh my, another idiotic like this. We have that in Ontario, but residential tenancy laws are provincial. How do you come up with a national lease when I don't even understand how they would do that.
Well, so
No,
apparently, again, the details are vague. We'll find out more, I'm sure, in the coming days. But it sounds like this $5 billion they want to give to provinces. The conditions are is that they're going to sign on to this national
Oh my God.
lease agreement as well. Like they're going to incorporate that. So again, I don't know. It's like, are you now saying that you're going to remove tenancy laws from provinces? Like, I don't know. I mean,
Yeah, you'd have
we'll
to.
have
Like,
to
you
wait
can't
and
have a
see. But
national.
like, good luck getting Quebec and Alberta to sign on to that.
Yeah, you can't have like a national lease when tenancy laws are provincial. I don't know. I don't understand. I don't even understand. Like, it's just like wasting money. I don't know. Anyhow, anyhow, that's my rant. So that's what I'm hoping to see, and that's what I think we're most likely to see.
interesting. Yeah. I, for my part, was thinking, a landmark focused announcement on some kind of new deal with provinces around housing would be great to see. Uh, Especially because even if this government leaves, maybe that's a precedent that the next government has to continue.
Mhm.
But the devil's in the details. And if they're going to gum it all up with some weird, ineffective measures that are not
Yeah.
going to move the needle
Mhm.
on supply much, and do nothing about demand being continually being gobbled up by investors and other groups faster than we can say, that's not going to work. But if they put some meaty stuff in there,
Mhm.
I think a real landmark provincial province, federal provincial discussion around housing the way that we've had summits around health and other things is really necessary in this country at this point.
Yeah. 100%.
Not going to happen.
Let's see. We'll see next month. We'll revisit.
Maybe going to happen. Slightly going to happen. All right. Well, that was super interesting. It was a little bit more freewheeling today, but I think we got some things off our chests.
We did.
We were all able to brighten our moods a little bit on this gray April day and share our views. So fun as always. Thanks to both of you. As always, thank you to our viewers and listeners for joining us for the roundtable. Keep your feedback, comments coming. Let us know what else you'd like us to talk about, and we will see you here again, same channel next month.